all of you no doubt have heard about this particular plan, which we call Registered Educational Savings Plan, or an RESP. This is a very, very popular type of plan, excellent way of saving money for a child's or a grandchild's education. Okay. There are essentially two kinds of RESP plans out there. There's what they call individual and family plans. So an individual plan is only one beneficiary. So you're buying it for one child, that child is the beneficiary, that's it. But you can also buy a family plan. So if you have more than one child, you may want to buy a family package, or if you have more than one grandchild, for example, you may want to buy a family package. So therefore, there's more than one beneficiary there, basically. And that usually is, if, for example, one of the children chooses not to go to higher education and everything, they will then basically, then you can just go in and change the beneficiary over to the other child who may want to in the family. Okay, they have to be in the family, can't be outside the family, have to be in the family. Then you may be able to simply change the beneficiaries over to that other child who does want to go to university or higher education or whatever. Okay, so basically the family package gives you a little more flexibility and everything. The maximum lifetime contribution is $50,000. Okay, so you can basically throw in the whole $50,000 in one shot if that's what you want. Or once again, you can just simply do it on a monthly or quarterly or annual basis. As long as, again, throughout that period of time, it is no more than $50,000. That is the maximum contribution that you can make. Okay, and usually the contributions are within like 31 years, for example. Then it has to it's finished, whatever. Okay, but basically that's what you have to do. Okay, when it comes to, of course, time to withdraw, obviously the child has to prove, that they are going to school and everything else. Okay, so there's a number of ways of getting the money out. The first one is what they call the Educational Assistance Plan, or EAPs. And the EAP, the Educational Assistance Plan, really it's basically a payout when that child goes to school, university, whatever it is. So they're 20 years old or 21 years old, whatever. They start taking money out. They can take out the interest. They can take out the principal. So that's they can take out any of the grants that the government, which we'll show you in a moment. So there's ways and means of getting money out. So basically, the educational assistance plan is really the money that comes out of the other end to pay for those tuition fees and books, and sometimes even if they are away from home, whatever, you may need to use that money just for residence fees and everything else. Okay. During the time that the money is sitting in there, however, Ottawa gets involved in here. So the government of Canada gets involved in here. So they offer you what's called a Canada Educational Savings Grant. And that is essentially 20% of whatever your contribution is to a maximum of $500 a year, and then a total maximum of $7,500. So by the time your child is age 17, let's say you've gone through all the way through, they're not 18 yet, which is really the starting point for this year, but let's say up to age 17, they have up to $7,500 of the Canada Savings Grant. So it's 20% of your contribution to a maximum of $500 a year, but the total Canada Savings Grant is no more than $7,500. And the only way, again, they can get that $7,500 if, in fact, they do go to university, higher education, because if they choose not to, then that Canada Savings Grant will be forfeited. You will lose that. You will lose that money. That'll just go back into the pool, basically, to be used for other students. Over and above the Canada Education Savings Grant, there's also what we call the Canada Earning Bond. So this is for lower income earners, basically. So the Canada Savings Grant, generally speaking, if you're making over $83,000, you don't get this. Okay, in other words, you really don't need this. Between $40,000 to $83,000 of income, you will qualify for the Canada Savings Grant. Okay, less than $40,000, you can get the Canada Earnings Bond as well. So there are means tests, you might say, in order for you to get these grants. So these are all basically ways and means the government of Canada can assist the lower income people to make sure that their children have adequate resources for higher education and everything else. Okay. So obviously the earnings are what we look at. And so the earnings is really the only part that is actually taxable. Once again, the money that you've actually put in yourself, okay, the proceeds, that $50,000 that you put in, that's principal. That's your capital, basically. That's your ACB. So you're not going to get taxed on that. But you will get taxed on the earnings that you get. So whatever the interest savings, whatever Canada savings grants are, all these things you're earned, obviously income along the way. So that earnings will be taxed, okay? But the principal itself will not be taxed, okay? The money that you put into the plan is not deductible. So there's not like an RSP where you can deduct the premium or anything. Your contributions are not deductible. However, the money that's within the plan is tax deferred, okay? It is tax deferred. So you do have that sort of saving, that tax sheltering aspect of it. And then when the money starts coming out, it will be taxed not in your hands as a contributor, but in the hands of the beneficiary, in other words, your child, okay? So basically, that child is the one that actually has to report that as income. But once again, because they have tuition fees, because they have residency, because they have books to buy, those are all deductible expenses anyways. So the end result basically is that it really it's a wash, okay? But if asked as RESP withdrawals taxable, the answer is yes. The earnings and all that are taxable, and they are taxable in the hands of the beneficiary. But only the earnings, not the actual capital itself. The actual capital just simply returns back to you, and that's it. So that's really all you really need to know for today's session, and we will see you next time.